3.
RTHK Radio 3.
Time's 8:24. On the phone from Tokyo is Nick Smith, Japan strategist at CLSA. Morning, Nick.
Good morning to you.
Well, one place where there isn't inflation at the moment, or not much of it anyway, is Japan. And as a result, the BOJ left its ultra-loose monetary policy in place last week. This is now really the big standout, isn't it, in the world? Because there used to be, I think, the Swiss National Bank was probably as dovish as the BOJ, but it's moved away from that now. So the BOJ's pretty well standing alone in the world here.
Certainly, yes. And I mean, it's funny that you strip out VAT, and this is really the first time we've been above 2% inflation, really since the early 90s. And yet there's a huge amount of criticism about this. There was the Kyoto poll a couple of weeks back where 59% of people said that Kuroda wasn't suitable as governor of the Bank of Japan. And then there was the rather more credible Nikkei poll over the weekend with a lot of criticism of the Prime Minister's handling of inflation. And you look back and say, well, they've been trying to achieve this for decades, and months after achieving it, they're already complaining about it. But surely the point is, really, you shouldn't have been trying to achieve inflation without a concomitant plan to get wages up. That, I think, was serious. And I don't think that inflation is terribly sustainable without wage growth.
This seems to be the big change, doesn't it, recently? That, I mean, this policy has been in place for quite a while now, several years, and the Japanese public haven't really talked about it or focused on it or really been too bothered about what Kuroda says. But suddenly, it's taking up a lot of headlines.
Well, he could have shown a bit more empathy. So they're struggling. If you look at what's been moving, and I find this absolutely extraordinary, if you look at what's moved since 2012, since the arrival of Abe, what's gone up is food. And so food prices are up 40+%, vastly outpacing anything else. And you couldn't have found a more socially divisive place to get prices up than in food. And it's a little difficult to understand why, but I put out a report where I mapped CPI food CPI against the balance sheet of the Bank of Japan, and sort of said, j'accuse. This is it's strange that you print $4.5 trillion, and really pretty much the only thing you can get to go up is the one most socially divisive thing.
And he said, I think, didn't he, that the Japanese public weren't too bothered by increasing prices, which he then had to go and retract, which was a rather insensitive thing for him to say.
It was. I mean, he was speaking as if he was speaking to economists, and of course the job requires speaking to the housewife and the man in the street, and they're not too happy about this. And that's simply because wage increases haven't been particularly good. I would have thought, I expected that we would get better wage growth than this, bearing in mind how incredibly tight the labour market is. So it's tighter than it's been for 87% of the data series history, going all the way back to the early 70s. And half of the points where it's been tighter were when Japan was actually inside probably the biggest bubble in human history, the late 80s bubble. So it's an odd situation that we've got a very tight labour market, but wages aren't going up.
So we're seeing some pressure points as a result of this, aren't we? Particularly in the currency markets, the yen at a 24-year low now, and also in the JGB market as well, where the Bank of Japan is just hoovering up lots and lots of government bonds, and at some point it's going to own the whole market, isn't it, at this rate?
It's obviously moving in that direction, yes. So the currency's at 135 at the moment. The high point for the year was back in January, where we were at 113.68. So it's a heck of a move, mostly over the last 3 months. Of course, taken as a whole, Japan, corporate Japan, is a beneficiary from all of this. But the strange thing is that over the last 25 years, wage payments have gone absolutely flat. And profits have tripled. So you would like to be able to say, well, okay, with the weak yen, the companies will be making more money. They'll be able to pay wages. They ought to pay higher wages, bearing in mind how tight the labour market is, and that way we'll be able to allow people to pay for things despite the inflation. But it doesn't seem to be going that way at the moment, which is incredibly frustrating. And we really need more out of government from this, which is what we'll have a lot of argument with the 10th of July upper house election.
Here's a quick question for you. The Japanese yen's at a 20-year low against the Hong Kong dollar, and Hong Kong residents have been rushing to Bureau de Changes to swap their Hong Kong dollars into yen. So what would you advise they go and do now with all this yen that they own? Should they go and invest it in the markets, or do they go and take a holiday in Japan? What would you advise?
Oh, you absolutely need to do both. I must say it's still very difficult to get a holiday in Japan, but one hopes that will change once we get the other side of the upper house elections. As for the market, it is dirt cheap, and actually it's doing better than others. So as long as the currency is hedged, Japan's off 7% against sort of 23-24% off for US stocks. But Japan is dirt cheap and actually not doing that bad as an economy because of all the fiscal stimulus going on.
Okay, Nick, thank you very much indeed for that. That's Nick Smith, Japan strategist at CLSA in Tokyo.